Have you ever noticed something strange about luxury fashion? During economic downturns, when tech stocks crash, when inflation rises, some luxury brands barely flinch. In fact, a few of them actually become stronger. While markets panic, these fashion houses continue raising prices, selling out collections, and dominating the resale market. Today we are ranking luxury fashion houses that are most resistant to global financial market shifts. These are the brands that have historically held their power through recessions, market crashes, inflation cycles, and changing consumer trends. We'll look at factors like pricing power, brand heritage, scarcity strategy, global demand, resale market performance. And by the end of this video, you will know which luxury brands behave almost like financial safe havens. Now let's start with number 10. Prada is one of the most respected fashion houses in the world. Founded in 1913 in Milan, the brand built its reputation on intellectual fashion and understated luxury. But Prada's relationship with economic cycles has been complicated. During certain recessions, Prada experienced slower growth compared to competitors. Why? Because Prada often relies heavily on fashion cycles rather than timeless icons, unlike brands with permanent must-have products. Prada periodically reinvents itself. However, Prada has recently strengthened its resilience thanks to the popularity of re-edition nylon bags, strong Gen Z engagement, a revitalized creative direction. So while Prada is powerful, it isn't the most recession-proof luxury brand yet. Valentino is synonymous with glamour and couture. Its iconic red gowns and Roman heritage give it enormous cultural prestige. But couture-heavy brands often face challenges during economic slowdowns. Why? Because couture relies on ultra-high-end clients and red carpet visibility. When global markets tighten, those discretionary purchases slow first. However, Valentino remains resilient due to strong global brand identity, powerful celebrity presence, growing accessories business. Still, compared to other luxury giants, it has slightly less financial isolation. Balenciaga is one of the most culturally influential brands of the last decade. Under modern creative leadership, the brand mastered something rare: viral luxury, sneakers, oversized hoodies, and meme-driven designs created massive demand. But that same strategy makes Balenciaga more sensitive to public controversies, cultural shifts, trend fatigue. When hype cycles fade, demand can fluctuate. So while Balenciaga has enormous cultural power, it's slightly less stable compared to heritage houses with century-long icons. Few brands have experienced as many dramatic comebacks as Gucci. From near bankruptcy in the 1990s to becoming a global powerhouse, Gucci has mastered reinvention, but Gucci's strategy heavily relies on trend-driven cycles. During boom years, Gucci explodes. During slower periods, growth can soften faster than more conservative houses. That said, Gucci still has enormous advantages. One of the most recognizable logos in fashion, massive global distribution, strong leather goods heritage. These factors help stabilize the brand, even during economic turbulence. Now we enter the truly resilient territory. Dior is one of the strongest luxury brands in the world. Founded in 1946, Dior combines haute couture, iconic handbags, global beauty dominance. Products like the Lady Dior bag and Dior Cosmetics create multiple revenue streams, which helps the brand weather economic volatility. Beauty products in particular provide a huge buffer during recessions, even when consumers cut back on luxury handbags. Many stay by Dior lipstick or fragrance. That diversification makes Dior extremely resilient. Saint Laurent has become one of the most financially disciplined luxury brands. The brand focuses heavily on sleek, timeless design, leather goods, consistent pricing strategy. Unlike trend-heavy brands, Saint Laurent sells modern classics. Items like the Kate and Lulu bags maintain steady demand year after year. That consistency makes Saint Laurent surprisingly resistant to economic swings. Now we reach one of the ultimate luxury powerhouses. Chanel has something extremely rare: extreme pricing power. Chanel has raised handbag prices aggressively over the past decade, sometimes multiple times per year. Yet, demand remains extremely strong. Why? Because Chanel built an ecosystem of prestige around heritage, exclusivity, timeless design. The classic flap alone functions, almost like a luxury asset class. Even during financial turbulence, Chanel's continues selling out collections globally. Louis Vuitton is arguably the most globally dominant luxury brand. Its resilience comes from three major advantages. First, scale. Louis Vuitton operates one of the largest luxury retail networks on earth. Second, iconic products. The Spady, Neverfull, and Keepall bags have been selling for decades. Third, accessibility within luxury. Compared to ultra-exclusive houses, Louis Vuitton offers a broader price range. That means even during economic slowdowns, millions of consumers continue buying Louis Vuitton products. Few brands demonstrate luxury resilience like Hermès. Hermès follows a strategy that economists call controlled scarcity. Production is intentionally limited. Demand is intentionally high. The result, products like the Birkin or Kelly bags often increase in value on the resale market. Even during market crashes, waiting lists remain years long. Thus, scarcity creates extraordinary insulation from economic volatility. You might be surprised to see a watch brand at number 1, but Rolex behaves almost like a financial instrument. Rolex watches consistently hold value due to limited supply, global recognition, resale liquidity. Models like the Submariner and Daytona have historically performed better than many luxury goods during economic uncertainty. In fact, during certain market downturns, demand for Rolex increases because collectors see it as a store of value. Here's the final list of luxury houses most resistant to global financial market shifts. 10 Prada, 9 Valentino, 8 Balenciaga, 7 Gucci, 6 Dior, 5 Saint Laurent, 4 Chanel, 3 Louis Vuitton, 2 Hermès, 1 Rolex. These brands combine heritage, scarcity, and pricing power in ways that make them unusually resilient. Luxury fashion is often dismissed as pure consumption, but the reality is much more interesting. Certain brands operate with the discipline of financial institutions. They control supply, they build generational prestige, and they create products that hold value across decades, which raises an interesting question. Could some luxury brands actually be better long-term assets than traditional investments? Let me know in the comments, which luxury house do you think is the most financially resilient? And if you enjoy deep dives into luxury markets, designer investments, and fashion economics, don't forget to like, subscribe, and I'll see you in the next video.